for that point. The US and China trade talks right now seem to be on track, but the 1st of September is going to be quite important. So the markets are slightly skeptical. Is the reason that you have seen a bit of a gains, but this is all in a wait and watch mode on how the talks really progress and whether or not the 1st September the new tax can be averted or not. So until then, it is going to be quite choppy on your screens. Kunal Shah of Nirmal Bank Commodities joins us to put that in perspective. Kunal, hi. How are you looking at the crude oil prices, and what's the sense that you're making in from all the global reactions, whether it's about US and China or the Iran exports, beginning? It is all still conversations.
Well, I think the fundamentals of oil is definitely pointing towards a bearish scenario. I'm not expecting oil prices to shoot up sharply. Even if there is a positive resolution from the US-China trade war talks, I expect a minuscule upside of 3-4%. But the fundamentals definitely remain bearish. US oil production likely to test 12.6 million barrels in next 6 months. So I don't see any major reason why oil should really shoot up from here. So sell on rise is my recommendation. 39.50 on MCX, good levels to go short for the downside target of 3,800, and stop loss should be placed at around 4,020.
A bit of an uptick for the same reasons has been seen in the metal prices also. We have seen some buying come in copper. Would you put out the same case for metals as well? Not a very strong up move is what you're expecting?
Well, yeah, I'm not expecting any major up move, but in fact, from present levels, I think a lot of base metal producers are going to find very difficult to produce it in case of copper, in case of aluminum. So all these metals look very attractive to me. Any positive indication from US-China trade talks, and we are going to see the first one to respond is base metal complex, because these levels are not sustainable at all. A lot of metals, if you see, they are almost at the cost of production, or they are going to go below cost of production. So I would say copper, take a contra call, 438.50, 439, good levels to go long, and upside target should be placed at 444, 445, and stop loss should be placed at 435 rupees.
Kunal, come in on the precious metal prices also, because even as there is a bit of a risk appetite back and we've seen global equities do well, the industrial metals are doing well too, but gold even then seems to be holding around those 1530 kind of levels, off from those 6-year highs that we saw yesterday. But at these current levels, what is your sense?
Well, long-term trend definitely seems to be bullish, but at these levels, I will not recommend to go long in gold. In fact, people who have a risk appetite, they can, in fact, for trading perspective, they can go short in gold, because like you said at the start of the show, any positive outcome from the US-China trade talks, another commodity which is going to respond negatively is gold and silver. So it has run up a bit. It has run up more than 25-30%. And I would say it's a good time. One should wait for the further upside, for the further indication that what is coming from the US-China trade war. And I think if any positive development, then gold can go down. So I'm taking little contra bet after a long time. I would recommend to go short in gold around 38,950, 38,600 to 650, 39,150.
Kunal, Manisha, thank you very much for joining in. With that, it's curtains down on Halftime Report. Thanks again for watching. Stay tuned. Business Lunch will take the market action forward.
Brought to you by IDFC First Bank. Always